The world is in a crisis it has not seen for 100 years. Some say we are already in World War III or a war to defend democracy. I say a new multipolar, free and fair world is being born. Old assumptions about who rules the world and how they rule are changing. But we should not panic, and on the Burning Archive, I offer you calm reflections on history to help you through this crisis. Each week I focus on one big event from the multipolar world, connect it to real stories of history, and share a fragment from the cultural heritage of the multipolar world. This week on the Burning Archive, we look at banking collapses in America and in Europe. What is happening? Could it spill over to a political crisis? How does it compare to the financial crises from 2008? And what are the lessons of history about bank collapses, political crises, and contagion? They are the questions on today's Burning Archive.
What thou lovest well shall not be reft from thee.
Welcome everyone, I am Jeff Rich. I am an independent author and podcaster, and this is the Burning Archive podcast, which is about all things history and the multipolar world. And I do it from a unique perspective as a retired government official and historian who is curious about all the world's cultural traditions of responsible statecraft. And that unique combination will come into play in this episode, since I'll be sharing some anecdotes from my own experiences as a very, very minor government official in dealing with financial collapses. How we respond to bank collapses is driven in part by the stories we tell ourselves about the past and how we project them into the future. It's a great example of how the past is not dead. The past is not even past. It still lives in the stories we have in our minds that shape our actions today, that determine our decisions whether to make a run on the banks or whether to bail out the banks. Today we are asking ourselves, or those leading government officials around the world are asking themselves, are we going to see a replay of the 2008 global financial crisis? Is the Great Depression coming again? Do I get my money out now, or is this just a blip? Will things continue more or less as normal? Staying calm in the crisis requires a mindful approach to history, which is what we practice here on the Burning Archive, and also in my weekly newsletter, 7 Glimpses of the Multipolar World, on Substack, which you can subscribe to entirely for free at jeffrich, jeffrich.substack, substack.com. So you can sign up to my free weekly newsletter there, and you'll get a whole lot of extra detail about the issues I talk about on the podcast, as well as notes on what I'm reading and all sorts of interesting little reflections on how the multipolar world appears to me. And you can also upgrade your subscription there and support me and get 2 bonus essays from me each month. So do check that out. Type into your browser now, jeffrich.substack.com, and put in your email, and you'll find all sorts of fascinating extra things each week on Saturday morning. Okay, let's get on with this show. Now, clearly a week or two ago, there was a huge flurry about the bank collapses in America and then subsequently in Europe. And while some of the media on the banking collapses faded a little bit in the last week, in many ways, this is the kind of big geopolitical story I like to cover on the show, not the first excitement, the first confusion and rush of the first news, but looking a little bit in a little bit more depth a little bit later. So what has happened? Well, earlier in March 2023, two major banks collapsed in America and one in Europe. And I say collapsed, although the nature of the collapse was different in each case. In America, on March 10th, Silicon Valley Bank, a bank based in Silicon Valley, which, was kind of like the bank for all the venture capitalists and other people of Silicon Valley, the IT hub of America, was closed by regulators after a large flight of deposits. And then Signature Bank, which was based in New York, closed 2 days later. Both banks were effectively taken over by the federal government and I think have subsequently been sold to other banking companies. And several other banks were in serious trouble with share price drops. And analysts identified nearly 200 banks that were identified as potentially vulnerable, especially after major losses on government treasury bonds. In Europe, the following week, Credit Suisse, a major Swiss bank, collapsed after a series of losses and liquidity problems. It was sold in a fire sale with strong government involvement to the other major Swiss bank, UBS. And Credit Suisse was recognised as one of about 30-odd banking institutions that are systematically important for the global stability of the financial system. So this is no small regional bank collapsing. This is a very major, long-established financial institution. So we've seen banking collapses and share market wobbles in America one week, and then a banking collapse in Europe the next week. And the world was wondering, will this spread? Will this become a contagion? Will it be a repeat of the 2008 global financial crisis? But governments and central bankers took a range of actions to stabilise the crisis. But today, on the 30th of March 2023, there doesn't appear at this point to have been any spread of the collapsing contagion. There is a somewhat eerie, even perhaps a suspicious calm. And of course, these most recent banking collapses follow on from the collapses of major Bitcoin companies over the last year or so. There's been a few problems in the financial systems of both America and Europe. Now, there will be longer-term impacts from these events. There are enormous losses. I think one estimate is that the unrealised losses of US banks estimated to be $1.7 trillion, and their actual equity of those banks is only $2.2 trillion. So, as well as that, there are significant risks and consequences potentially for the intervention, which I will say a little bit more about later on. But notably in America, all depositors at Silicon Valley Bank, whatever the level of their deposit, the government backed their insurance. All deposits were backed by the government. It seems to have got through the crisis, but it does have the risk of, well, if there's $1.7 trillion of losses in the American banking system, and there is a run on further banks the government taxpayer will be on the hook for an enormous amount of money when the US government doesn't really have control over its budget. And of course, all sorts of people are opining on this. I would highly recommend 2 podcasts. There was a podcast from the Hindu podcast. The Hindu podcast is a podcast related to an Indian newspaper magazine, which had a week or 2 ago a highly accredited Indian economist who spoke very clearly about the nature of the problem. So I'd check that one out. And the other podcast I'd highly recommend is called Ones and Tooze, and it features the economist and historian Adam Tooze, Tooze. So I'll include links to those podcasts in my weekly newsletter so you can follow them up. But of course, people are asking what has caused this crisis, or if you like, what is the story here? And I think there's basically sort of 5 levels of the storyline of this issue, just to sort of fill it out a little bit. First of all, there were some curious business practices in some of these banks. Silicon Valley Bank followed some highly irregular business practices, chasing some perhaps questionable businesses in Silicon Valley. And Credit Suisse has had a series of what are rather coyly known as management problems. Adam Tooze, in his podcast, says that sometimes bank runs are bank runs by idiots, but in this case, certainly Silicon Valley Bank was a bank run by idiots. Then there's a second level of the business culture involved. Silicon Valley Bank really reflected the business culture of Silicon Valley, I guess. Has been celebrated worldwide and promoted endlessly on all sorts of American media channels. And the Hindu podcast commented on this, that, to some degree, this was all a bit of a Ponzi scheme. Adam Tooze also described the highly networked relationships between the venture capitalists, the bank owners, the business employees, etc., and a bit of a culture of it's all about the dream, it's not actually about the practical dollars and cents of the business. But this culture of the magic of Silicon Valley and the magic of the special relationship between technology firms and venture capital has really been, I can attest from personal experience, has been very heavily promoted worldwide for a couple of decades now, and has been seen as like one of the great economic success stories. But I guess some of its downside has come home to roost. So there, I guess, more specific local factors in the storyline of this issue. But there is a broader issue as well that underlies these bank failures, and that is inflation. Treating, technology businesses and venture capital as all about the dream and the big ambition and the chutzpah of the venture capitalist in Silicon Valley is all very well when the real price of money is effectively very little, when inflation is very low, and interest rates are effectively zero, as they have been since the kind of 2008 crisis. But that world is gone. Inflation has been roaring back into the world economy over the last couple of years, partly because of COVID, partly because of and the government spending related to COVID, but also partly because of a general policy of pumping money into the economy. And then the other sort of economy-wide factor, I guess, involved in all of this is the money supply. So one of the drivers of inflation has been the increase in money supply. That's been quite extraordinary in last few years, and interest rates were very low until recently, but partly in order to control inflation, banks have been also increasing interest rates over the last couple of years, and so the price of money has been going up, and that has had the combined effect of inflation and interest rate increases has had a big impact on one of the key investment areas for the Silicon Valley Bank, which was United States Treasury bonds. The Silicon Valley Bank invested heavily in these bonds. In fact, the US banking system is heavily invested in these bonds. That's where the $1.7 trillion of losses comes from, of unrealised losses. Sort of on paper losses. The value of those bonds is very much determined by interest rates and inflation, and there's a huge amount of money. But these banks have had unrealised losses, and then when there was a bit of a panic amongst the depositors in the Silicon Valley Bank, then there was a run on the bank, and the bank could not pay the depositors, and that's what sort of killed the bank. So they're the basic storylines about what has happened, and of course there is also a broader context of all of this, the broader context of how the kind of worldwide financial system works, and I don't pretend to be really fully understand that, but also the shocks of the real world to that system, including COVID and supply chain problem, the war in Ukraine and in other parts of the world, and the growing moves within the world to reduce reliance on the United States dollar as the reserve currency, as the sort of currency backing the financial system, backing and dominating the financial system. And these broader system issues, I think, means that this story will be running for a while and will pose enormous challenges, I think, across many fields of international relations, politics, social and cultural themes that we cover on this podcast. But bank collapses and government action also pose challenges for democracy and governments, a bit of a current theme on the podcast. How are our democracies going in India, in the West, America, Australia? And in my experience working in government, there are three broad concerns from a governing perspective with banking collapses. First of all, how do you make prudent decisions on who pays for the losses and mitigate the impact of those losses on government debt and deficit? And you can see this tension in the US decision to cover the deposit insurance or to back the deposits of not just the small investors but the big investors in the Silicon Valley Bank. It's not entirely clear at this stage whether the European and American governments are really handling this side of things well. They seem to have got through the immediate crisis, but perhaps they've racked up some very consequential bills for themselves if there are further runs on the banks. Secondly, how do you prevent the banking system problems creating a contagion for businesses, governments and consumers and depositors? This is the whole issue of banks being too big to fail. Or some people say in Silicon Valley Bank case that it was too well connected to fail. And there's the other dilemma that there are those small number of very large banks but especially in Europe and in America, there are a very large number of small to medium financial institutions, and there's too many of those for the government to save. So there's a real dilemma there about balancing keeping people calm and not provoking a bank run by idiots versus, I guess, betraying and conning people, leaving them stuck with a bank that is run by idiots. And one of the real dilemmas is trying to prevent problems in the banking system leading to real economy problems as well. Real businesses not being able to get loans, real businesses having financial consequences, being forced to close because of those problems in the banks, and then a spiralling problem of unemployment, housing sales, and all that sort of thing. And then the third big problem, and this really connects to where, the risk of the banking crisis spilling over into a political crisis, is how do you avoid grievances about the money spilling over into a political crisis? And the grievances about the money can be both, well, the bank lost my money, but also the bank bailout lost my money. People can be aggrieved at both with the bank that failed, but also with the government that bailed out rich depositors or wealthy executives from those banks. And this problem was very much part of the problem with the 2008 crisis, and it's still really reverberating through the financial system. And we can certainly see this same kind of political tension surfacing in America, certainly, about the Silicon Valley Bank. There's a dramatic contrast, I guess, between, on the one week, Joe Biden providing government backing for all depositors at the Silicon Valley Bank, however wealthy, and reportedly some of them had billions of dollars in some of these bank deposits that were being protected by ordinary taxpayers. And then the next week, there are 1 million people protesting on the streets of France about an increase in the working age for increase of the age of the pension, for the retirement age in France. It seems a little bit incongruous that on the one hand, government's stepping in to protect multimillionaires. On the other hand, the government is being really pretty rough with a bunch of people who just want to stop working at the age of 62. So I think it's important to remember that to some degree, the impact of the various small p political deals that were negotiated in 2008 to resolve the global financial crisis, the bailouts for the banks and all that sort of thing, still reverberates on global politics. Occupy Wall Street, populism, Donald Trump, globalists versus nationalists, and the reality of wealth redistributions that occurred still very much happens. Countries, the 2008 crisis also extended a few years into the later Eurozone crisis, and countries like Greece are still very much marked by the politics of that time. So, for the little history section of the podcast, it might pay just to have a little bit of a look back at the 2008 and subsequent global financial crisis. I guess my little history section today is partly informed by my personal memories of working in government through financial crises. I guess I've partly included some of those reflections in the earlier discussion about some of the things that really matter for governments in thinking through what to do in these situations. When I very first joined the Victorian government in 1990, the Victoria was going through major budgetary and financial problems following the collapse of a number of financial institutions, the pyramid building society collapse, and the general sort of state financial meltdown, which was really quite catastrophic for the finances of the state. Then in around about 2000 or so, I was like a early witness of the dot-com bubble, watching various consultants from McKinsey and Co. describing how IT companies had totally rewritten the natural laws of economics and could go on inflating their value infinitely forever and ever and ever until, of course, the bubble burst. And then in 2008, of course, not so directly, but I certainly saw a fair bit of the frenetic activity that went on trying to solve the global financial crisis. But in the early 2000s, I was also working for the Premier's Department in Victoria for Terry Moran, who later actually became the head of the Prime Minister's Department during the global financial crisis, Terry Moran. And on Terry's request, and partly out of my own curiosity, I was trawling through the website of an obscure American professor who had this fascinating website, like an old-style website, which had all these links and complex resources on it, that was all about the complex new reflexive financial system. And that website was run by none other than Nouriel Roubini. And I can't, to be honest, entirely remember what I read or what I was reading on the rather complex papers about financial economics and how, if you like, money was being reinvented. The nature of national economies was being reinvented by the changing financial system. But what I do recall is being struck that just recognising that I did not understand this world, that I was economically perplexed, but still had a sense even then, and I think perhaps maybe even Terry Moran learnt a few lessons from all of that as well, that the new world of the financial, global, international financial system had to be understood in its own terms if governments were really to deal with its crises. And anyhow, Nouriel Roubini is known as Dr. Doom, and he is renowned for predicting the 2008 financial crisis, which of course started with a housing bubble in America. Dr. Roubini has also predicted a major recession in this year, 2023, and has written about various mega threats and doom loops. Indeed, there's an article here in front of me that says that the economy is headed into a Bermuda Triangle of risk. Economist Nouriel Roubini warned. He seems to have also got into a bit of got stuck in a bit of a loop of making bad predictions. But more generally, I think the response to a bank collapse is an interesting case of how people draw on familiar historical models or set historical narratives. When confronted with the Silicon Valley Bank today, do we compare it with 2008? Or do we compare it with 1929? Or do we compare it with any number of previous banking collapses? And there's reason to think it could be very different to 2008 because its origins seem to be not in a housing bubble, not in the kind of risks that were there back in 2008, but in a whole set of other problems. And similarly, the same thing with 1929 and 1890. So it's a good example of how it's important not to get too fixated on what happened last time and not to expect the same way for things to play out, whether that's expecting things to play out really badly or really well. And the historian Neil Ferguson has an interesting article, I think, in the Wall Street Journal, which also has a series of comparisons to quite a few other banking collapses that have occurred over recent times. Again, I'll include a link to that in my weekly Substack newsletter that you can subscribe to for free at jeffrich.substack.com. And of course, I don't really have the expertise to analyse the specific economics of this crisis, but it does seem to me that there are 5 big differences with 2008 and then the later Eurozone crisis in 2012, or it came to a head, I guess, in 2012, that probably will mean that this financial crisis, if it indeed does develop into a full-blown financial crisis, which is not known yet, but if it does, it will likely have a different trajectory and pose different challenges for decision makers. Well, first of all, the level of debt is a hell of a lot higher in Western economies than it was back in 2008 even. Government debt is particularly high as well as household debt. And then inflation is a significant problem today and a difficult problem to control as well today, especially when there's a lot of pressure on not wanting to be too harsh with interest rates, given the financial difficulties of the banks. But, inflation in Britain is over 10%. Inflation in America is over 6%, and some people say it could be higher. And there are some places in the world where it's really quite high. And what's more, the heavy government spending of recent years with COVID, etc., has also exported a fair bit of inflation around the world to the developing world as well. And then thirdly, there's also economic sanctions that affect, a very large country, Russia, that is the third largest oil and one of the largest natural gas providers in the world, and that could also potentially spill out onto China. So that creates some problems in the adjustments across the world for these sort of economic shocks. And of course, there's also a war going on, which is in part a war about the economic dominance, the geopolitical dominance of America, which relates to the final 5th big difference, I would see, in 2008, which is that we do seem to have this not just realignment of the geopolitical system, the shift to the multipolar world, but there are significant trends, which I don't fully understand, but do seem to be significant, to reduce reliance of major commodity trading countries like China, like Russia, like Brazil, the BRICS countries, to reduce their reliance on exchange in US dollars, making the US dollar less important as a reserve currency. And if that happens, then the cost of debt and all that sort of thing, the interest rates in America will be significantly higher. So they are 5 significant factors that mean that how this whole thing will play out, I think, is perhaps a lot more difficult and perhaps a lot harder to control than even the time back in 2008. A lot of the kind of financial wizardry of it all was very much came to the fore. But I think in this financial crisis, I think some of the more raw geopolitics, geoeconomics will also come to the fore and affect how things play out. In summary, I would say that the masters of the universe in New York are no longer the masters of the universe, and they're going to discover, just like Silicon Valley Bank perhaps discovered, or the venture capitalists of Silicon Valley Bank discovered, that they can't just make their own reality. Interesting to look back at 2008 and how things are different and how things are similar. And also just to be mindful of the stories we tell each other. It's very easy when there's a bank collapse to get stuck in one of Nouriel Roubini's doom loops, and things don't always happen that catastrophically. Things don't always happen that rapidly. They don't always turn out so well or so badly. So also very important just to be mindful of the historical models that guide us through these crises. The third part of the show is always about a fragment from the Burning Archive, and this week it's a little bit different, partly because I've gone on for so long, but what I thought I would do is recommend a historian on financial collapses, a historian who can help you understand what is going on with this financial crisis and what you should do about it. And the historian I'd recommend is Adam Tooze. So that's Tooze. And he's written, in fact, a series of books, but in particular his book Crashed, Crashed, How a Decade of Financial Crises Changed the World, is a really excellent account of, well, what did happen in 2008. And what's more, he actually connects what happened in 2008 in America and then around the world to the Eurozone crisis, Greece's, catastrophic debt situation, I think problems in Spain and Portugal as well in 2010 to 2012, and then to subsequent sort of problems in the sort of developing economies, including Russia and maybe Brazil in around 2015 and 16. And he rather brilliantly connects both that rolling series of crises, but he also connects the technical problems in the financial system with the geopolitical problems in the politics. So there's actually a whole chapter in Crashed on the Ukraine crisis in 2014, which in part was also part of this sort of economic crisis about incorporating Ukraine into the European Union. And he has also written a great book called The Deluge, The Great War and the Remaking of Global Order, which really explains how America first really became the world's superpower, not after World War II, but in fact after or during World War I, and how to some degree the next 20 or 30 years was partly a reaction against America's financial dominance of the world, and how it ultimately sort of ended up dominating the world financially anyhow. And perhaps that financial dominance is coming undone as well. And Adam Tooze also has written a book called Shutdown, I think, which looks at the global economic response to the COVID pandemic. And he also appears in the podcast, I think it's called Ones and Twos, which is described, I think, as the Foreign Policy Magazine's sort of economics podcast. And he's really quite good. He's quite pithy, obviously. You always have to take everyone's perspective with its biases and whatnot, but I think he's probably if you had to choose one person to read to understand the complex links between today's economic crisis and those previous economic crises, to look at well, what are the lessons of history from the 2008 and subsequent crises or other banking collapse crises, and how can we apply those lessons to the unique and different situation we face today, I would start with Adam Tooze crashed. So that is my podcast for today. I've gone on a little bit longer than my planned 30 minutes today. I hope you don't mind. And I've also spoken about matters that, I don't have a whole lot of expertise in, but I hope I've also given you pointers to the people who can really help you understand those things, and that is at least a valuable tip for you. And one final reminder to join up to my free weekly newsletter at Jeff Rich, JEFFRICH.substack.com. You can join for free, and you can also choose to upgrade your subscription for, I think it's $10 a month, and support me to produce more content, and you'll get a couple of extra pieces of bonus writing from me every month. And in addition, you will also find all the links to my various content there. You can buy my books from the Burning Archive and Gathering Flowers of the Mind from Amazon and other online retailers, and you can subscribe to my YouTube channel at the Burning Archive. I've just this week put out a review of Peter Frankopan's wonderful new book, The Earth Transformed, an Untold Story, which tells the story of climate change and the environmental impacts of human civilization, and increasing resource exploitation over industrialization, urbanization, or pollution and all that sort of stuff over the last couple of 100 years. But he tells the story from the beginnings of time until today. So it's an absolutely fabulous book, and you can check out my video review of that book over at my YouTube channel at The Burning Archive. And you can also share this podcast with a friend, leave a review, and help spread the word about The Burning Archive. So until next week, do remember, what thou lovest well will not be reft from thee. Bye now.
What thou lovest well shall not be reft from thee.